तो
पता चलेगा।
গাড়ি নিয়ে গিয়েছিল, গাড়িটা টোল লেগেছিল খড়গপুরে নিয়ে গিয়ে বলেছিল এদিকে গাড়িটা টোল লেগেছিল। তো অজিতকে খুব প্রশ্ন করেছিল যে স্যার টোল কি করে লাগতে পারে, আপনি কোথায় গিয়েছিলেন?
Good morning, everyone. We will start our webinar within 5 minutes. Good morning, everyone. A very warm welcome to the 12th Indirect Taxes Colloquium, August 2022, organized by Will GST and Tax Connect. I would like to introduce our speaker, Mr. Vivek Jalan. Mr. Vivek Jalan. Mr. Vivek Mr. Vivek Jalan is qualified chartered accountant, qualified LLM and LLB. He is the chairperson of the Indirect Tax Core Group of the CII. Also, he is the chairperson of the Fiscal Affairs Committee of BCCI. He is a regular speaker of various professional forums on the key areas of direct and indirect taxes. During the session, please put your video and microphone off. If anyone has any query, please write in the chat box. We will answer all your queries at the end of the session. Now I request to Samir to say a few words.
Italy, I think Samir is not there. He is out of office today.
Okay, sir. Now I request our speaker, Mr. Vivek sir, to take the session forward.
Yeah. Thank you, Titli. And I'll share my presentation. Is the presentation visible, Titli? Is the presentation visible?
Sir.
Yes, sir, visible.
Yes, sir, visible.
Yeah. Thank you, Titli, and thank you to all the participants for joining in this 12th Indirect Tax Colloquium. We generally have monthly colloquiums, but since in the last month we had post just one day post the council meeting ended, we had a session on the council meeting uh, recommendations. So last time we did not have a colloquium per se, but we had a different session. And thank you for joining today being the start of a longish weekend. We were thinking this time whether to have it today or maybe after 2 weeks because of the ensuing holidays. But then between Will GST and Tax Connect, we thought, but we should have it today so that people start this longish weekend with a takeaway on the many developments under GST. Simultaneously, also, we are seeing a lot of changes in the taxation landscape in income tax with so many circulars, SOPs, etc. being out. So we'll have something on indirect, direct taxes also separately after 2 weeks. But we thought at least let's put in the indirect taxes part here today. So, friends, you have already seen the our list of items which would be discussed, and among others, we would be discussing some really burning issues which are coming within the scrutiny of the department, assessments, audits, which the department is holding. The items or the issues which are coming to the fore, and how to prepare yourself, plus how to deal with those issues as and when they arise, we would be discussing. And we have seen last 1.5 years or so, fake invoices has been the most burning issue pan India, and which the GST department, CBIC across the country, they are clamping down upon. Only yesterday I was saying Mumbai South Commissionerate has busted a 450 crores odd racket in case of fake invoices. And I think at least in the last 20 years or so, this is the first time we have a circular 171 especially dealing with an aspect of fake invoices. While even on our YouTube channel in our video, I have said that this circular may not deal with all aspects of fake invoices. It has dealt with just one aspect of fake invoices. But the last para of the circular, if you see, it has really kept it very wide open, and it has said that there can be so many circumstances, and the penalties or punishments for fake invoices in various circumstances would revolve around section 73, 74, 132 and 122. So that is how it has kept it open. And it goes without saying that you can type all your questions in your in the chat box, and this is the benefit of a physical seminar, the webinar, that we can answer all the queries in a live webinar, which generally does not come with a recorded webinar. So starting with fake invoices, what first the example the circular gives. As I said, it deals with primarily one aspect of fake invoices, that is the supply of bills or invoices without actually supplying the goods or services. It assumes there is no underlying supply of goods or services, and it is just a supply of bills. So what happens generally, we have been seeing in India, you know, I think since this country was born, that there is a supply of bills, right? How does this happen? In a scientific manner, it can happen in various manners in the society, but in a scientific manner, how does it happen? So you go to a shop to purchase certain item, you get a option that whether you want a bill or you do not want a bill. If you want a bill, you will be charged 118 rupees. If you do not want a bill, you will be charged 115 rupees. And many a times we say, okay, we will go without a bill. I am a consumer. What do I have to do with a bill? So you purchase the material, and the invoice relating to that material which you have sold, that is 118 rupees invoice with 18 rupees GST credit. That 18 rupees credit invoice is sold to a B2B business which can take the input tax credit. Even there it is sold to that business. This invoice is sold with a 5% discount, right? Say for 113 rupees. And the sale or the supply is reported in the GSTR 1, GSTR 2 also, and there is an arbitrage opportunity, and it is scientifically disclosed. The department does not have a queue on who is the final consumer, right? The whole process is goes on seamlessly until and unless, of course, some search or seizure or some kind of enforcement happens. This is the transaction primarily which fake invoices circular 171 targets at clarifying. So it says the first part of the transaction, I have told you that how this fake invoice is generated. It deals with the second part of the transaction, that is how the credit of the fake invoice is taken without the supply of the goods or services. So say for example, there is a person A, right, who has got this fake invoice. He has sold the material to somebody else, and he has got a bill which he can trade for. He has got a bill of 100 rupees plus 18 rupees GST. There is another person B which has got output tax liability. Say for example, just to understand, the product is steel. So A has got an invoice of 100 plus 18 rupees for steel. B is a trader in steel. It has got an output tax liability which it has to devolve. And there is another person C to whom B sells its product, which has also got an output tax liability. So A generates the fake invoice. It gives the fake invoice to B, that is 100 plus 18 rupees of GST, and B takes the input tax credit. There is no receipt of the goods, underlying goods in our example steel. B thereafter passes on this credit through another fake invoice to C, which takes the credit and adjusts it against its output tax liability. It may or may not be the final product. So question is, what would be the liability on A? What would be the liability on B? And what would be the liability on C? The circular says that since there is no supply of goods or services by A, there is no taxable event. Since there is no taxable event, there cannot be any demand or recovery under section 73 or 74 from A. But A would be liable to a penalty under section 122(1). The penalty for supplying of goods, supplying of invoices without the actual supply of goods or services, right? B, again, B takes the input tax credit fraudulently, violating the condition under section 16(2)(b), and therefore it is B which is the recipient of the goods or services, which would be liable for a recovery action under section 74, right? Or 73. Generally it is 74, that is the fraud cases. Then B supplies the fake invoice to C or passes on the credit to C. And again, since there is no supply, already penalty has been invoked under 74. There would be no additional penalty under 74, but there would be or can be a separate penalty under 122(1) on B, which is the recipient of this fake invoice. Now C, the circular does not say about C in any of its example 1, 2 or 3, but it states generally that C, since it has received the goods, again it comes in the partakes the nature of B in our first example. So C also violates 16(2)(b), takes credit without a corresponding inward supply of goods or services, and therefore it would also be liable to penalty under section 74. Penalty under section 122 is the penal provision for these acts of receipt of invoices without receipt of goods or vice versa. And simultaneously, there is a punishment of imprisonment, bailable, not bailable, cognizable, not cognizable, etc. You can go through section 132 for the punishments. So there would be a penalty 122, punishment 132 simultaneously, right? Friends, the last para of this circular, it makes the circular very open and it leaves it open-ended. It states that there can be so many other cases of fake invoices which have to be taken on a case-to-case basis. One very important provision it deals with is section 122 subsection 1 capital A. Section 122 subsection 1 capital A states that in case it is found out that a particular person is the ultimate beneficiary of an input tax credit and the transaction has been done at his instance, then a penalty under 122 1 capital A would be applicable on this. Friends, this is the most dangerous provision which is invoked in most of the cases, sometimes where completely against the corroborative evidences, it is tried to be proved that this person, there is some ITC fraudulent cases in the chain, and this organized sector person shall be held liable. And to make that person liable, even though sometimes the enforcement authorities understand that maybe this person is not the actual person, but it is tried to prove under 122 1 capital A that, gentlemen, you are the final beneficiary. You have taken the input tax credit, and we will prove that you are the mastermind behind the transaction and therefore make you liable for the penalty under 122 1 capital A. What are those transactions? And I have said that there are many other transactions which are not covered in this circular. First, and this is the most important transaction out of this, whatever you can see on your screen, bill to ship to cases. Now, what happens in a bill to ship to case? Say I am a manufacturer. I am purchasing material for my factory. I am located in, say, Delhi. There is a supplier down south in Vijayawada, Andhra Pradesh. And there is my supplier in Gurgaon, right? So I always take my material from my supplier in Gurgaon because I know him for the last 5-6 years. However, he does not have raw material, so he connects with this guy in Vijayawada and he asks Vijayawada to send the raw material to me in Delhi. Vijayawada person does a bill to ship to, bill to Haryana, ship to Delhi to me. Then my Haryana supplier, he does a corresponding and back to back bill to ship to Delhi, right? Haryana takes the input tax credit
उसमें क्या है
from
वो मेरे पास
Vijayawada.
आया था अभी। एक तो जो M1 वाला
Kindly
है
mute.
वो उसका अभी रजिस्ट्रेशन ही नहीं हुआ ना, तो देने से फायदा क्या होएगा उसको?
Yeah. So now this Vijayawada person bills to Gurgaon. Gurgaon takes the credit and then passes on to me in Delhi. I take the credit, manufacture my material and then sell it. Now this person in Vijayawada, he takes some other fake in credit and there is an enforcement action on him. He cannot pay the GST to the government. The GST has to be recovered by the government, or at least the value of the GST has to be recovered by the government. So it goes to my supplier, first L1 supplier, and even L1 Gurgaon, he raises his hand. He says, gentlemen, I don't have money. I cannot pay such a huge amount. And therefore it comes to me as an L2 supplier, L2 recipient. And the allegation is that, gentlemen, you are the beneficiary. That is proof that yes, I am the final recipient of the raw material who has finally enjoyed the credit. Fine. But it is also tried to prove that, gentlemen, see, the transaction was carried out at your instance. These are the words under 122 1 capital A. Similarly, if this person in Telangana, in Vijayawada, or in my supplier, L1 supplier in Haryana, their registration numbers are cancelled. Generally, they are cancelled ab initio by the department for certain non-compliances, generally non-payment of GST. Then similar allegation is tried to be proved
सेटिंग हाँ सर
that
सेमिनार में उस सर में
kindly mute. Yeah. So if my L1 or L2 suppliers GSTIN is cancelled ab initio since the very beginning, it is tried to be proved by the enforcement authorities generally that this is a case of fake invoice, right? And it is a clear fact that I am the beneficiary. because I am getting the final material, I am getting this raw material or whatever the goods might be. Again, my supplier in Gurgaon or his supplier in Vijayawada, they do not pay the GST to the government, they do not file their GSTR 3B, or they file their GSTR 3B but take certain fake input tax credit at their end. We all know in GSTR 3B there is one figure of input tax credit which is reported. Of course, now there is a backup also as per 2B, etc. But till the time the department or enforcement and authorities unearth that there is a fake input tax credit, the supplier elopes. Very recently in Delhi, we had this case where certain this customer, he took certain material from my client and gave a post dated check, and thereafter he closed his GSTI number and eloped. Nothing can be done rather than, lodging an FIR, etc. So these are the various cases by which it is possibly I am the beneficiary of the material or the supply of goods or service, but the transaction may not have been done at my instance. However, to levy a penalty under 122(1)(a) plus a corresponding action under section 132, it is tried to be proved by the enforcement authorities that the transaction has been done at the instance of the person who has taken the benefit of the input tax credit. Right? Similarly, there can be another transaction or another way by which an e-way bill. Now, in Maharashtra, there was a case whereby even e-way bill was generated. If e-way bill is not generated for a transaction, then it is gone, right? Then they have got corroborative evidences, the enforcement authority, that see, e-way bill is not generated, therefore there is a clandestine removal or no removal, there is no supply of goods or services. In Maharashtra, there was a case where even e-way bill was there, but the consignment note of the or the lorry receipt of the transporter was not available with the recipient, and because it was a the CIF consignment, therefore he was not required to have a LR copy with himself for his books of accounts. But since LR was not there, it was alleged that look, there has been no movement. There is another similar, database which the enforcement authorities have. That is now this FASTag tracking data. So FASTag data in one of those, again in Uttar Pradesh, where we all knew that the supplier has got the material, but the truck from Uttar Pradesh, it may have taken some route, maybe that FASTag machine may have been faulted. The truck was not, the lorry was not showing in the FASTag data, and therefore it was alleged that see, my vehicle has not moved and there is no movement, and therefore there is a fake invoice case. I will come to, the final, how these are to be dealt with, our legal submissions in this point. But these are the various types, right, of fake invoices cases, which are sometimes tried to be made out by the enforcement authorities. Our legal submissions on these cases. Number one, friends, the apex court in the case of Bharti Airtel in December 2021 had held, although the case was a case of whether 3B can be amended retrospectively. However, if you see the while holding its judgment, the Honorable Apex Court has answered a cardinal question as to before 2021 December, what was the basis on which the recipient could take the input tax credit. It said that the basis on which the recipient should have taken the input tax credit before December 2021 would be the books of accounts, that is the purchase register. There were 4 conditions before December 2021 which the recipient had to fulfill to take the credit. Number 1, he should have got the invoice 16(2)(a). 16(2)(b), he should have received the goods or services. 16(2)(c), the tax should have been paid to the government. 16(2)(d), he should have filed the 3B return himself. So in case all these conditions are proved and the recipient has taken the credit as per his purchase register, input tax credit cannot be denied just due to a mismatch between 2A and 3B. Generally, the department alleges 16(2)(c), that is the tax has not been paid to the government, right? If the recipient has verified and you are under an obligation to verify, generally many of the recipients, they just match 2A, 2B and books. That is not sufficient. If you have verified that the supplier has filed his GSTR 3B, then your job is done. You cannot do the impossible was held by the Apex Court in the case of Arise India Limited, where it had held that where the recipient has checked the matching and has paid the tax to the supplier, he cannot be asked to do the impossible and check whether the supplier has paid the tax to the government or not. Same was held by the Honorable High Court of Gujarat and Haryana in the case of Gherulal Balchand versus State of Haryana. These are VAT regime cases. There are many other cases, Vinayaka Agencies, Simplex Infrastructure, Karnataka High Court, etc. Next, the Honorable Calcutta High Court in the case of LGW Industries has laid down a very, very beautiful principle. The Honorable High Court of Calcutta has said in an ab initio registration cancellation case that you as a recipient have to see when the supplier's GSTIN has been cancelled. Say you have purchased the material from the supplier on 31st of July. His GSTIN has been cancelled on 10th of August, maybe with retrospective effect. But if you have purchased the material before the GSTIN of the supplier was cancelled, then you cannot be denied the input tax credit. If you have purchased the material after the GSTIN was cancelled, then input tax credit can be denied to you. Right? Similarly, the Honorable this Calcutta High Court in the case of LGW Industries, it reiterated its decision in the case of Sanchita Kundu very recently. The Honorable Madras High Court in the case of DY Bethel Enterprises has held that as per press note of the CBIC dated May 2018, the input tax credit of the recipient cannot be denied until and unless the supplier is not traceable, he has cancelled his GSTIN number, he has become insolvent. if the supplier is still in existence and traceable and identifiable, then the department has to first go to the supplier and take enforcement actions, and only if there is a case of elopement of the supplier, then the department can come to the recipient. Section 42 subsection 3 of the CGST Act also deals with matching and says that the department has to go to both the supplier as well as the recipient. In case of mismatching cases, the word both is very, very important in section 42 subsection 3. So friends, these are our respectful submissions. In these cases, right, you can go through this PPT. We will share this PPT with you. We have, dealt with all of these in this PPT. In fake invoices cases, the various cases which we have discussed. There are other cases as of now, very recently in West Bengal. One of the officers, it stated that since my supplier, he filed his GSTR 1 after the time barring period in September, right, 2018. It was a 17-18 case. So I will not be eligible to take the corresponding input tax credit. Friends, our legal submission in this case is that 16(4) cases, section 16(4), it casts a limitation on me as a recipient, that in case I have taken the input tax credit after September 2018, that is time after time barring cases, only then my input tax credit can be denied. However, if my supplier has filed his GSTI 1 late, that cannot be a basis of denying me as a recipient input tax credit, especially in case the supplier can prove that the corresponding tax was paid earlier. Also in GSTR 2A 2B mismatching cases, right? If the supplier confirms and he can prove by a self-declaration or by his returns that the tax has been paid to the department just by a 2A 2B mismatch, it is our legal submission that input tax credit, which is a property of the recipient under Article 300 capital A of the Constitution of India, the property in input tax credit cannot be denied to the recipient who is a bona fide recipient, right? However, you have to take, as a recipient, you have to take various precautions. What are those precautions? Matching of 2A 2B. Mr. Sunil Giri, kindly mute yourself. Kindly mute, please. Yeah. Friends, another litigation in the offering, and I'm saying with certainty, waybill mismatch cases. Waybill reconciliation is another largest litigation which you will see in the coming days. In case waybill has not been generated, your supplier will be caught. In case there is a mismatch with the waybill with the tax invoice, your supplier may be caught and corresponding action would be taken on you as a recipient, alleging that there has been no movement of the goods at all, or alleging a valuation dispute. Therefore, friends, please be very, very sure that waybill reconciliation is done from 2017-18. It is very important, at least if you have not done the old reconciliation, it is the order of the future. Way-bill reconciliation for taking credit of input tax for goods supply, that is very, very important. Friends, another litigation in the offering is non-linking of credit notes and debit notes with the original tax invoices, even post February 2019. Friends, if you see Rule 53 sub rule 1 capital A, it is still mandatory to link your credit note and debit note to the original tax invoices. I am repeating, it is still mandatory to link your credit note, debit note with the original tax invoices. February 2019 only relaxed the linking on the GST portal. Please go through Rule 53, Sub Rule 1, capital A. You have to have in your books of account a linking of the debit and credit note with the original invoices. The department can invoke this and require a linking, and it is a mandate that you have to show the linking. Next, cross charge versus ISD. We have been saying this from the very beginning. Cross charge is not a process under the GST law. Nowhere it is a process. It is only input service distribution, which is a process. Now the department has started raking up these issues. In many of the cases, it is seen that, say for example, you see there is a statutory auditor's bill. You have taken the statutory auditor's bill in your HO and you have cross-charged it, and your branches have taken the credit on the basis of cross-charge. Friends, this is not the right way to do it. You have to go through ISD route. Otherwise, your branches inputs tax credit will be denied going forward, because you as a supplier of service, you are showing that your HO is a supplier of the statutory auditor service, which is not so. Your supplier would be faulty, hence your supply would be faulty, and therefore your input tax credit can be denied. Next, pure agency. 194 capital R TDS. Those of you who are practicing income tax and GST both, you would be aware of this. If you're practicing only GST, please be aware of this. Circular 12/2022 by CBDT has held that under TDS under 194 capital R would not be deductible on the reimbursement bills only in case the original reimbursement bills for which a reimbursement has been claimed by a pure agent is in the name of the final principal. So if you are the importer, you hire a C&F agent. C&F agent pays dock charges on your behalf. Only if the dock guy makes the bill in your name, only then the C&F agent would be taking a reimbursement, and you would not be deducting TDS under 194 capital R, right? However, if the dock bills are in the name of the C&F agent, TDS under 194 capital R would be deducted by you while making the payment of the bill to the C&F agent. Friends, please read explanation 2 to Rule 33, which says that the right of the goods or services has to be proved that it is the right of the principal. In our respectful submission, the same analogy would apply in GST also. If the dock charges bill is in your name, only then it can be claimed as a pure agency without GST by the C&F agent. Otherwise, even on the pure reimbursements, GST requires to be levied. and TDS under 194R requires to be paid. Another conundrum after 194 capital R is the reimbursement of perquisites or the payment of perquisites or benefits upon which TDS is deductible under 194R. The recipient shows it as a benefit under section 28 clause 4 in income tax. Simultaneously, you have to reconcile. If you are a GST taxpayer, you have to reconcile with your 26AS. My legal submission is 99% of these cases a GST demand would be there. So please study 194 capital R and its impact on GST very, very carefully. Right? So these are the various burning issues, ladies and gentlemen, which we wanted to discuss. There are many others. You can go through these at your own pace. But we would discuss some other issues and which is very, very important under GST. And most important among them, we would discuss one by one. The most important is filing GSTR 3B correctly after this circular 170. I will just give you few examples, right? Let us come to the examples directly. Kindly try to visualize GSTR 3B return which you are filling, right? I will only dwell upon one section, that is table 4 of GSTR 3B, which relates to input tax credit. 4A relates to claiming the credit. 4A1 is for import of goods. 4A2 import of services. 4A3 is ITC for reverse charge. 4A4 is ISD credit. 4A5 all other ITC. 4B is for reversal. 4B1 permanent reversal. 4B2 temporary reversal. 4C is equal to 4A minus 4B. That is net input tax credit claimed. 4D is for disclosure. 4D1 is for disclosure of blocked credit. 4D2 is for disclosure of others. 4D1 is for blocked credit under 75. 4D2 is for others. Now what we are doing, say for example, my GSTR 2B, it has got two credits. One is my statutory auditor's bill credit. The other is a credit for a food bill. What do I do? Both of these reflect in my 4A5, all other ITC. I edit my 4A5 and take only the statutory auditor's bills credit. Correct? Because I am not eligible for food credit. If I am a very, very compliant taxpayer, I am, or very, very, knowledgeable taxpayer who takes out time to read GST minutely, then what do? I show it as a disclosure in 4D1, right? Now, the change. The thumb rule first is that you have to take the entire 2B credit in your 4A5. So both these bills credit, statutory auditor's bill, food bill credit, you claim it under 4A5. Now you see this food bill, that is a blocked credit. permanently disallowed to you. So you disclose it as a reversal under 4B1, permanent disallowance. And then report it under 4D2, blocked credit. Correct? So this is the thumb rule. Take the entire credit as per 2B in your 4A. See whether it is permanent reversal, temporary reversal, reverse it accordingly in 4B1, 4DB2, and then reflect it under 4D2 as a disclosure purpose. Now I will take 5 or 6 examples which is there on your screen. First, import 4A1. You import the goods, bill of entry made on 31st of July. You got the material on 1st of August. 2B shows this credit, reflects it in 4A1. You take the input tax credit 4A1, but you will receive the material in the next month and you will be eligible in the next month. Therefore, show it as a temporary reversal under 4B2. Partly bill of entry made on 31st of July, some material received, one consignment received on 31st July, one consignment received in 1st of August. But you can take the credit only after when the last consignment is received under section 16(2). Same process. Next, import of services. Just a hypothesis or just a example. You go to Dubai, consume certain food. You have to pay under reverse charge. Pay it under reverse charge under 3.1.d. Take the input tax credit under 4A2, show it as a permanent reversal under 4B1, and then show it as a disclosure in 4D2. Next, reverse charge. You get a rent a cab operator's bill, pay it under reverse charge under 3.1.d, claim it as a credit under 4A3, show it as a permanent reversal under 4B1, show it as a disclosure under 4D2. Next, 4A4, input service distributor. Say your ISD registration, again it has got two bills. One is a food bill, one is a statutory auditor's bill. You claim both the credits. Your 6A shows both the credits, claim both in 6 GSTR 6. You have to make now two bills for ISD, one for eligible credits, one for ineligible credit. Make two ISD invoices. Both these invoices show in your 2B, right? Now in 4A4, take both the credit, reverse in 4A1, 4B1, you reverse the food bill credit or ineligible credit and show it as a disclosure in 4B, 4D2. Similarly, in all other ITC, correct? In all other ITC also you have to do the same which we have discussed. Therefore, friends, it is very, very important. Now, again, all other ITC, one more example I will take is that, say, your supplier has dispatched his material on 31st of July. You received it on 1st of August. In 2B, it is showing on 31st of July. Auto-populated in 4A5. Take the input tax credit, show it as a temporary reversal in 4B2. And next month, in the month of August return, you take the credit in 4A5. Clear? So friends, now this is the process by which you have to file GSTR 3B. Mind that this is a circular. This is applicable immediately. Therefore, immediately your GSTR 3B has to be filed as per this process. There is no retrospective prospective. It was assumed by the government that this should have been done from the very beginning. It is just a circular. Kindly note. Yeah, I'll answer all your queries at the end of the session. Another 10-15 minutes. I will answer all the query. Please do keep typing. Next, another circular on liquidated damages, circular 178. Now, this is again something which we have been discussing in all our webinars, in all our lectures since day one, even in service tax. Liquidated damages, notice pay, penalties, etc. There are 9 examples which have been given by this circular, or 8 examples. Compensation for coal blocks, check dishonor charges, etc. All of these are not liable to GST. Many of the taxpayers have paid the GST on this. Well, in case unjust enrichment is not invoked, if you have paid under protest, then you can claim a refund if you have not taken the benefit of the input tax credit. So what is the principle on which liquidated damages notice period pay of employees are not leviable to GST? You have to understand the definition of services under erstwhile regime, which is applicable in GST also. A service is an activity made by one person to another for a consideration. So first you have to see the activity has to be done for a consideration. So in case of liquidated damages, for example, you give a construction contract to a contractor. The contractor delays the construction by 1 month and he pays you a certain penalty in the nature of liquidated damages. What was the activity for which the contract was made? Was it to recover penalty? No, it was to recover, to pay him for the construction charges. So this activity for construction charges as per the agreement required a consideration to be paid, and for not doing the activity there was a penalty which was imposed. Correct? And therefore this penalty is just a flow of money and not liable to GST. It is not a consideration for the supply of the construction activity itself. However, late payment charges, penalty or interest, retention money or show cause, no show money recovered by hotels, etc. They are included in the value of the taxable supply and partake the nature of the original supply. So for example, you have supplied a computer to a customer. The customer makes a delayed payment by 1 month and pays you certain interest. This interest has to be taxed at the same GST rate and under the same HSN code like that of computer. Many of the taxpayers make a mistake. They show it as a service under 9997. That is not right. The HSN code is that of the computer. So for example, if you are supplying cars or batteries or any other coal for which GST rate is 28%, then this interest or penalty for delayed payment has also to be charged at 28% and not 18%. Now you will ask me a question, sir, if we partakes the nature of the original supply, then the time of supply has already gone 2 months back. Should I pay an interest on this amount again? Answer is no. If you see section 12 subsection 6, section 13 subsection 6, the time of supply in these cases is the time when you receive the money. So they have carved it out separately under 12.6 and 13.6 for time of supply also. So this is very, very important circular. and welcome circular and a long standing dispute now comes to a rest. Various other circulars, circular 179, again it clarified that on the electric cars with or without battery. And in fact, if you see that entry, there was a misconceived confusion, I would say, because the entry number 242A in schedule 1 of 1 2017 central tax rate already clarifies that a electric operated car with or without battery would be liable to tax at 5% because it remains an electric operated car. So but it has further reaffirmed the circular. Stones used for construction without mirror polishing, they have distinguished between mirror polishing, non mirror polishing, general polishing. Only mirror polished stones are liable to a higher rate. Mangoes, there are three categories exempted, which is fresh mangoes, dried and sliced, right? That is the second concessional rate, 5%, and then there are all other farms, including mango pulp, that is 12%, right? Water. Now, this is again a big issue sometimes, even a sewage water, which is made suitable for drinking, that is considered to be purified water and liable to GST. That is not the case. Purified means you are adding something. Even now, purified, that word has been removed. So, water made safe for drinking, there is a circular in this regard also, that would be considered to be as normal water, not liable to GST. It is only mineralized water, salinated water, etc., that would liable to be GST, to GST. Byproducts of masoor, pulses, dal, they would be treated as byproducts and cannot be treated as cattle feed. Now there are various other clarifications. One very important thing in case of ice cream parlors and other services which has been made, that see, in case there is a circular on day X, and there was a confusion which the circular has clarified, they have regularized this, saying that okay, whatever has happened. After the date of this circular, the higher rate of GST would prevail. Whatever has happened, let it happen, that is gone, right? So this is a welcome move by the department. Okay, so various on construction services, the PLC charges that would be construed for leasehold land, that would be construed as leasehold charges itself. Uh, Land leveling charges, etc., if it is supplied with the land, it would be considered as land itself. So if you are supplying the land after leveling, drainage, etc., that would be considered to be as land itself. However, the person who is giving you the drainage service, right, or the leveling service, that would be a separate service, that would not be considered to be as land, right? Renting of motor vehicles. Now if you rent the motor vehicle along with the fuel charges, that would be considered to be as renting of motor vehicles, right? But if you rent your motor vehicles right, or a motor vehicle which is plying on a separate route, right, that would be considered to be as exempt in it would if it is a non air conditioned motor vehicle, right? So for example, if a bus plies in a particular route, right, and you have 10 tickets for your employees who get up in the bus and they can go home, that would be not considered to be as renting of motor vehicle, that would be considered to be as a uh, charges for availing the non air conditioned motor vehicle services. But if you take certain motor vehicles for pick up and drop off your employees, and you pay the person say on an hourly rate, that would be considered to be as motor vehicles renting, which is taxable under reverse charge mechanism. Now, one very important clarification on employees, right? payments. Generally, we know that payment to employees, that is exempt from GST under Schedule 3, not being goods or services. But in case you are offering certain services like pick up and drop, which is not there in the engagement letter or the agreement of the employees, then that would not be considered as a perquisite under 17(2) of the Income Tax Act, and that would be liable to GST, right, as a service by the employer to the employee. Correct? So this is very, very important. Again, I would draw your attention to TDS under 194R. If this be the case, then possibly it would become as a benefit or perquisite under 194R, and you have to deduct 10% TDS also. So friends, very, very important. Now you have to look at GST law as a whole. And it cannot be that you know only GST, you have to know income tax also, what is developing in income tax also. You have to know what is developing in IBC, you have to know what is developing in the legal fraternity across the country, and then you have to apply the GST law in the right perspective. Now, the Honorable Apex Court, in the course of Pradeep Goyal, we know that they have the Apex Court has ruled that even the state government officers have to affix a digital identification number, document identification number, DIN number. Telangana, Karnataka, they have all mirrored the DIN circular. So do not reply if you get a communication from the department without a DIN number from even the State Department, you can invoke this Supreme Court's judgment in the case of Pradeep Goyal. In customs, generally classification is, not very, very, of interest to everybody. But I've just picked up one advanced ruling of customs in the case of Rashi peripherals. Now you see there is an RFID device by which you scan the barcodes. Now, if that RFID device has a telephony also, you can make calls from that RFID device. Is it a mobile, or does it remain the RFID device itself? And classified as automatic data processing device. Well, the advanced ruling authority for a change, which generally rules in the favor of the revenue, they have also accepted that, see, you have to see the primary use of a particular goods, and you have to have a trade parlance test. Are all RFID devices having telephony? Is the telephony used for a specific purpose, right? So for example, in a warehouse which is like say 1 kilometers, you have an RFID device and a telephony by which you communicate internally. That is actually an RFID device and not and an automated data processing device. It cannot be made into a mobile phone, right? So this is a very important ruling, and the analogy of the ruling can be used in other cases too, right? Transitional credit, very, very important judgment by the Honorable Apex Court in the case of Philco Trade Center Private Limited. In case you have a TRAN dispute, you have missed taking the TRAN credit, even CTD credit. You remember there was a CTD document, credit transfer document. Many of us have missed the CTD credit. Many of us have missed taking the TRAN 2 credit. We have missed taking the TRAN 1 credit. This order of the Honorable Apex Court in the case of Philco Trade Center does not only restrict to the writ petitioners. If you are an aggrieved person, if you have not missed out any transitional credit, you can take the credit in the window which the department opens from 1st September 22 to 31st of October 2022. Thereafter, of course, the department would see whether you are eligible, you are ineligible, etc. And thereafter, the credit would flow to your credit ledger. However, very important in this order is that they have not touched upon the fact that whether you can take the credit of invoices which are more than 1 year old as on 30th of June 2017. So to that extent, maybe again there would be disputes. But still, it is a welcome judgment, and in one shot, the Honorable Apex Court has laid to rest most of the TRAN cases. There are various other clarifications. You see, You can go through at your own pace. You may have already gone through all of this because now the GST Council 47th meeting decisions, they are quite, there have been some time on that. So I will dwell upon only the important aspects which may have skipped your attention. Okay, GTA. Now we all know that after this 47th council meeting, the good transporters have got three options. First, they continue to pay under reverse charge, be under reverse charge where the recipient pays 5% and takes the credit if eligible, or under forward charge at 12%. Now they have got a third option to be at forward charge with 5% without ITC also. They have to declare in an extra 5 by 16th of August. They have to, if they go under forward charge under 5% without ITC, they have to declare on every invoice where they are at 5% without ITC in annexure 3. The question is, say for example, you are a person who is exempt, your output services or goods are exempt, primarily exempt. Say you are a supplier of alcohol. Can you ask the transporter that only for you to supply at 5% with forward charge? So transporter, is he got does he have an option that one bill he makes at 12% forward charge, the other bill he makes at 5% forward charge? Well, in our respectful legal submission, there is no bar on this, and the transporter can well go ahead and do this. Residential dwelling. So if you are a registered taxpayer, very important, registered taxpayer, then if you are taking certain residential dwelling on rent, you have to pay GST under reverse charge. Well, dispute may be raised on whether you can take the input tax credit under 17.5G, alleging it is personal consumption, but our submission is that input tax credit can be taken on this. However, see, this says whether you are a registered person. Only if you are a registered person, you have to pay the GST on residential dwelling rent. Now, who is a registered person under 2 subsection 94? A registered person is one who takes registration under section 25. Who can take registration under section 25? A person who is liable to pay GST under reverse charge is a person who has to mandatorily take registration from rupee 1. But this notification says that only if you are registered, you have to pay on reverse charge on rent of residential dwelling. So question is, it becomes a chicken first or an egg first? Whether first you take registration if you are receiving the services of renting of residential dwelling and pay reverse charge, or first you have to be registered and you have to cross your threshold limit of 20 lakhs or 40 lakhs, whatever the case may be. That still remains a issue. However, even if you are a composition taxable person, whether you are registered just for the purpose of TDS or TCS under GST, you still remain a registered person, and therefore you have to pay GST on reverse charge on this residential property hiring. Certain other clarifications, public funded institutions generally for the the electronic suppliers, they used to supply computers, etc. to the public funded institutions at exemption, claiming a lower rate of exemption. Now that notification has been withdrawn. Recredit. Many a times you have got a wrong refund, paid the tax with the interest, but there was no option of recredit. Now they have said that you give a letter to the department. They are duty bound to give you the recredit in PMT 3A within 1 month. Right. So very, very important and welcome Rule 86 for capital B. Interest only applicable in GST on payment through debit to the cash ledger. So if you have taken input tax credit, not utilized it or partly utilized it, you have to pay only on the amount of utilization. This is further made clear by invoking rule 88 capital B. Very, very important. Now from 18th of July, most of the inverted duty refunds, they are a history. However, for the past, if you are claiming now, there is a change in formula, and let me tell you, there will be a huge impact on your refund. So please apply the right formula. Do not wait for the GST portal to amend the formula. You can do it manually. You can amend that, because you see, the second portion of the formula, first portion is inverted duty turnover by aggregate total turnover into ITC. There is no change. Minus tax payable. The tax payable, the second limb of the formula, there is a change. Now you have to multiply tax payable into net ITC by aggregate ITC of goods and services. So this tax payable is auto populated. What we suggest is you go ahead and change it manually and claim the input inverted duty refund even now. No need to wait for the GST portal to change the formula. Various other clarifications, sector wise, GST would be there on packaged commodities. However, if you are wholesaling more than 25 kgs of packaged commodities, rice, wheat, cereals, etc., then no GST would be there. There was a hue and cry. They have clarified it, but they have clarified by means of an FAQ. Oh, this is very, very interesting. An FAQ without is not a circular. It is not binding on the officers. So you see, uh, tomorrow there might be a dispute, but as of now, if you are supplying in wholesale trade pre-packaged commodities with a label, right, no GST would be there if the package is more than 25 kgs. Various amendments in case of transportation, logistics, agri, you can go through all of this. Most of you who are in these trades, you have already implemented these. So friends, I think with this we have tried to cover, all the amendments which have come in the past 1 month or so in GST. We would take the questions now. Okay, we would go one by one. Mr. Mathur says, if a vehicle number is mentioned wrongly in the invoice, e-waybill, transport bill, can this be treated as issuance of fake invoices? See, Mr. Mathur, you see, now, of course, as I said in one of our cases, only because LR was not available, e-waybill, right vehicle number was there. Even that was categorized as a fake invoice. So this also can be taken as a pretext of being in the fake invoice. So yeah, it all depends upon how creative the officer who is dealing with the case is. So it is always better to, in these cases where there is a mismatch with the vehicle number, please file a letter with the department that this was a mistake, so that tomorrow there is no allegation or allegations of suppression and fake invoices. Mr. Sachin says fake invoice, no recovery under 73, 74, but penal action 122(1)(2) shall lead to misuse of power and harassment to honest taxpayers, mainly in case of service, which are intangible in nature. Yeah, service is much more prone, I would say, to fake invoices, and so you have to have the proof of delivery of the services. That is very important. And that can be done in case you have the right contract, right? So in GST or in taxation, even in income tax or customs or everything. It is very important you have the right contract with yourself, right? So you have a contract where you say that yes, this was the service, have a proof of delivery, have a certificate from the service provider, or certain bills or certain activities, certain documents where the service has been provided. And this can be done only by your payables department who is processing your payment. So again, now GST cannot work in silos. GST, income tax, taxation department in an organization has to work hand in hand, not only with your accounts department, but even with your sales department, HR department. It is very important that you do not compartmentalize, and tax department, more of everything else, have to work, have to keep the eyes and ears open, have to keep on taking trainings for your various departments. And only then you can ensure that your organization is litigation free. Mr. Praveen Kumar, after importing the goods at port, it is kept in oil seed tank and sold by A to B, B to C without e-way bill, as there is no requirement to generate e-way bill. Do you see any challenge in this? No, there is no, see, if you are selling it, it is just like it is a bond sale, I suppose, right? So in case of bond sale, there is no requirement of eBay bill, but there has to be a contract of bond sale, right? And only if you have a contract, it would be not liable to GST under Schedule 3, right? No requirement of eBay bill. However, the final movement from out of on to the final moment, there has to be an e-way bill. If there is no e-way bill there, then that can be challenged. But here I do not see any challenge. Mr. Ashok Jha says an SSE filed GST return for March 18 very late in February 22 and claimed ITC for invoices of 17-18. The returns was filed late due to financial crunch in the business. The government has extended the dates for claiming the ITC till March 19. GST returns has been filed first year. Yeah, so that is since the dates were extended to March 19, therefore it is eligible, and as it is, but you have claimed in February 2020. Now, so you have violated even that day. That is one. However, important is the point that whether taking the credit in GSTR 3B, is that the only way by which an ITC can be claimed or not. So that is important, an important point which we have to see as per the documents available and as per the facts of the case. There have been various judgments. Even in the recent income tax, there was a judgment that in case the department is alleging that there is a suppressed turnover, then they have to give a corresponding deduction for the expenses of the turnover, and only the profit element should be liable to income tax. If you draw a same analogy, of course not at the departmental level but at the tribunal level, then in case the department is alleging that there has to be an output tax payment, then corresponding input tax credits should also be allowed as a deduction while making the final output tax payment. You cannot play hot and cold saying that okay, for output tax you have received the supply, so taxable event has happened. Even for input tax you have received the inward supplies, and therefore you have you know have the substantive right of ITC. However, the from the revenue side, 16(2)(d), that can be always argued, and to that extent, you see, it would be difficult. So, prima facie, Mr. Jha, I can say that it is a 50-50 case. Cannot be expected that there would be a relief at the CIT appeal stage, but certainly at the tribunal, whenever it is formed, or at the high court stage, one can look at it depending upon the facts of the case and the documents available. Okay, please advise if ITC is eligible. The department says not eligible as claimed late, but SSC says he claimed it in March 18 returns, but filed it late. Please advise, sir. You see, yeah. So again, I think I have answered this. This was extension to your earlier question. Okay, Mr. Praveen Kumar says would request to share future invite through MS Teams. It would empower host to control the mute unmute situation. Yeah, in WebEx also there is such a feature and our IT is doing that. Mr. Roy says, can I raise multiple e-way bills against a single invoice in case customer wants to deliver goods at different places against that particular single invoice? You have to make separate delivery challans, and against the delivery challans you can create e-way bills, right? However, again, I the e-way bill is not the issue. I think the issue is the invoice, because in the invoice you have to show ship to as only one. Can be only one ship to party. There cannot be multiple ship to parties. So practically, I feel you should make separate tax invoices showing different ship to parties. Mr. Rajendra says in case permanent reversal 17.5 under 4B1, once it is showed under this table, circular states it is not required to be shown under 4D1. Correct. But the circular is against the notification. If you see the notification, they have said that you have to disclose. Even the circular, it says you may not disclose under 4D1, but 4D2. That there I feel that this circular is conflicting with the notification, and I think that 4D2 it is mandatory to be disclosed. Mr. Rajesh said food purchase credit reported in 4A5 reversed in 4B1, but same to be reported in same month 4D2. Yeah, you have clarified correctly. Is advance received against supply of goods, but supply not made and advance not paid back? Is this consideration against supply and GST chargeable? You see, if supply is not made, till the time supply is not made, GST is not required to be paid. However, if the advance is forfeited due to certain clauses in the agreement, then this forfeiture would not be liable to GST because the advance was received for certain other act, right? However, again, if the contract says that the forfeiture is for some particular act, only then it would be liable to GST. So you have to see what the amount which you have forfeited, booked as an income, what is it for? If there is an agreement for an act, and if that comes within the four wall of section 70, then only it would be liable to GST. So you have to see the agreement. That is very, very important. Mr. Jha says supplier promised that windmills tower will produce 1 megawatt of power but was producing, and the buyer was charging liquidated damages and was charging GST also. Now with this circular, GST liable on these LD, if it is not applicable, can they get the GST refund? Again, unjust enrichment. Mr. Jha, you have to prove unjust enrichment, that the counterparty has not taken the input tax credit. There is no enrichment to anybody, and whether there is a corresponding provision in your books of account. So all of this you have to see uh, if you want to claim a refund of this. If you can prove that there is no unjust enrichment, it is our legal submission that refund should be allowed in this case. Mr. Jha has a lot of queries. He says if land is sold with development right with approval from government department from environment regulation, then sold with GST applicable after circular query is not clear. Please, if you can again clarify this. Can you explain eligible credit under 75 and others? Yeah, you see, if it is not eligible under 17.5, only then it would not be liable for GST. It would be blocked under 17.5. But say, for example, it is not the credit is not eligible as elsewhere specified. If it is a non-business purpose inward supply, then it is nowhere blocked under 17.5, and it is blocked under a non-business purpose credit, which under 16.2, which you cannot take, and that is others ineligible credit. Mr. Dinanath Gupta says non-applicability of GST on all LD. Is it also applicable on penal recovery from transporter for shortage in transit, deficiency in service during transportation? Yeah, I feel that should be covered, but again, you have to see the facts of the case and apply the analogy as per the circular. What is the GST rate applicable on transportation of passenger service if it is provided by non-body corporate to body corporate under RCM? As far as I remember, it is should be 18%, but I need to check because GST rates offhand it is difficult to remember. Mr. DK says party has sufficient credit. On some credit availed, party did not pay to the supplier within 180 days, neither reverse whether he has to pay interest even though there is sufficient balance of credit. No. If there is sufficient balance of credit, I would suggest that and advise that there is no requirement to pay input tax, the interest on this amount. Mr. Dinanath Gupta says whether we have to give yearly declaration from transporter who is already FCM from 20 to 23. Yes, you should get a yearly declaration that in the best interest of the business. Mr. Vanayak says in case of residential dwellings, do we need to pay GST under RCM if it is for commercial purpose? Of course, if okay, so if a residential dwelling is used for commercial purpose, so for example, you have a transit house which is used say partly as an office. So in that case, no GST required to be paid on RCM. Mr. Rohit Srivastav says, I am registered in Haryana, hire residential property in Delhi. Then whether I will be liable to pay GST under RCM, and if yes, what will be the place of supply? Mr. Srivastav, I think you see, if you see section 22, read with the section 2 of the IGST Act, you have a fixed establishment in Delhi. My opinion is that you need to have a registration in Delhi also. So, because you have a fixed establishment in Delhi, to receive the goods or services by way of a residential apartment, therefore you have to take registration in Delhi and pay the GST on RCM. I know some of you may not agree with the view, but believe me, this has been discussed so many times with various commissionerates. If you see this may not be the right forum to discuss in detail. We can discuss at length on this, and I'm very certain on this. And the state commissioners are very certain that if you are having any permanent establishment with a sufficient degree of permanence in any state, you have to take registration. Mr. Ankit says, I am registered person, have given a go down at the ground floor at my house to a business unit for business purpose. Am I supposed to pay GST under RCM? You have given a go down on ground floor rent and you are registered. So go down is for commercial purpose. So you have to charge GST on forward charge mechanism. Mr. Vinayak says, what is the time limit of claiming ITC under 16.4 for 22-23? 30th November 2022 has been enacted by the Finance Act 2022. However, it has not been notified as yet. We are waiting for the notification which should come before 30th of September 2022. If it does not come, 30th September remains the last date. Mr. Praveen Kumar says whether supply to industrial consumer of 20 kgs bag will be falling under exemption category. Yes. So supply to industrial consumer in 20 kgs bags would be coming under the Legal Metrology Act. I think it is under Rule 3 of the Legal Metrology Act. If the package is more than 25 kgs but it is pre-packaged and pre-labeled, 5% GST would be applicable if it is for retail trade, but if it is for wholesale trade, not applicable. What is the time limit to claim ITC under this? I have already discussed. Whether tax audit can, whether during audit can be paid through GSTR 3B, whether tax during audit can be paid through GSTR 3B or DRC mandatory. No, it can be paid through GSTR 3B also. Can we raise e-way bill to unregistered customer? Any possible, because e-way bill of buyer, no, you can show URP and you can raise an e-way bill on an unregistered customer also. Mr. Nilesh says the LD circular whether taxability of various penal charges collected by banks to be taken on similar line as that of check bounce. Example, penal charges for various convenience of breach. Yes, of course. I think the same analogy would apply. Wrong bill to ship to invoice generated by supplier along with IRN and waybill. The destination of the goods is proper but billed on wrong address within the PAN. Now it has to be corrected by issue of credit note by the supplier and has to be issued, and fresh invoice as billing and shipping address will be the same, but it will be without movement of goods and e-way bill. Will it be treated as a fake invoice? Mr. Vikash. Uh, so e-invoice is generated, wrong billing address, you have taken the material as moved. Correct? E-way bill also billing address is wrong. Now, the only way to rectify, you have rightly said, is a credit note. Again, fresh invoice, but you don't have a movement document on that. Cannot be categorized as fake invoice, provided please file a letter with the department on the facts and circumstances of the case. Right? Otherwise, of course, there would be a allegation of suppression, falsification, etc., etc. Mr. Nilesh says, okay, this is done. Mr. Ashish says, can we bill two in one state and ship to another states in same party? Yes, of course. Why not? Mr. Nilesh says, withdrawal of exemption to SEBI. Services by SEBI now taxable. Services SEBI levies registration fee for FPIs which is collected and other DPDs which reimbursed to SEBI which will be taxable. In the end, will there be any liability in the entire transaction in the hands of SEBI and DPs, or it is an export transaction? Okay, yeah, this is a burning issue, Mr. Nilesh. As per the notification, it will be liable to tax. However, since it is not the transaction, right, which is liable, which is an zero rated. It is the supply which is zero rated, right? And for a zero rated supply, if you can fulfill the 5 conditions mentioned under 2 subsection 6 of the IGST, that it is actually a export of service, then I would say it would be zero rated, treated as an export of service, although it is also a taxable transaction. Similarly, like say for example, you have an exempt supply, but if that exempt supply is also exported, then it will become a zero rated supply and you can get the refund on that. Same analogy would be applicable in this case, and our submission is that it should be treated as an export supply which is zero rated and ITC should be available on that. Okay. Miss Revati says if GST under RCM applicable for all registered person paying rent on residential house. Yes, Miss Revati, it is applicable on all residential persons. Mr. Sunil Giri says whether 194R is applicable if the company sell free sample for testing to other company and also for taking the order prospectively. Yeah, Mr. Sunil Giris, you see, they have clarified by this circular 12/2022. CBDT has clarified that in case of, you see, actors, etc., brand ambassadors, if they take certain product, advertise it, return it back. Only then it will not be taxable, TDS would not be deducted under 194R. But if they do not return the product back, it would be liable to be taxed and TDS would liable to be deducted under 194 capital R. Same analogy you can use here. If you give a free sample, do not get it back. TDS under 194R would be applicable even if whatever use that person might be putting it to. But you have to deduct TDS under 194R. Mr. Ankit says, circular says cancellation charges travel agent would be liable to GST. Again, it is going against the concept, of that amount recovered through cancellation was not actual intention of the supply. Yes, I agree, Mr. Ankit. Totally agree with you because this is a different transaction and the transaction was actually to give this travel agency services, but yeah, this is something which has to be dealt with possibly by the courts and would go through the jurisdictional life going forward. Okay, Mr. Vyas says requesting to please provide once again explanation on table 4 of GSTR 3B. Well, I have explained it thoroughly. I will just touch upon. You have to claim the entire input tax credit available in GSTR 2B in your table 4A. See whether it is permanent reversal, temporary reversal. Permanent reversal, show it in reverse it under 4B1. Temporary reverse is under 4B2. If you have a blocked credit 16.4 or place of supply blocked credit, you have to show it as a disclosure under 4D2. Mr. DK says, sir, this is in continuation to payment of interest after 180 days. Since rule 137.3 is to be charged, interest would be payable even if the sufficient credit. You see, if interest, you see this, of course, the department can dispute, but if ITC is already available to you, right, then here a revenue neutrality generally would not be a defense, but here if ITC is available to you, already it is an excess ITC, then our understanding is it should not be leviable to interest in this case, right? However, yeah, dispute can be raised by the department. Okay, Mr. Ankit says purpose of the residential dwelling is not satisfied for renting of commercial purpose would also be liable to RCM. See, residential dwelling, the very word residential dwelling They could have used the word dwelling, but they have used residential dwelling. So the very word residential signifies the purpose, that it has to be used for residential purposes, right? Otherwise, the whole purpose of the using the word residential, that is defeated. So in our case, of course, the final purpose test, that is the most important test, and the act has to be read as per the purpose test. So this would be applicable only for residential dwelling RCM, not for commercial dwelling. Mr. Mathur says LD clause are part of the main contract for construction. Supply LD becomes applicable by virtue of LD clause. Yeah. Mr. Mathur, you see, what is LD clause? It is there, but it is as a penal clause for not rendering the construction service. What is your requirement? Your requirement is for construction service, not for not rendering the construction service, right? So the primary purpose is construction service which you are seeking as a recipient, not to a delay in construction service, right? Similarly, from an employee, what do you want? You want his services in the notice period. You don't want him to leave during notice period, right? So that is why you are invoking a notice period pay as a penal action. So that is why this would not be liable to GST. This is our legal submission in this part. Now it is, this circular is also clarified it. Mr. Rajesh, if material is received next year, credit reflected in 2B is claimed in 4A5, then same reported in 4B2, but same to be reported in 4D1 in the same month. Well, this is not clear. The recorded video link in the would be available on our YouTube channel. It would also be shared by Will GST on mail, so you can go through the recorded thing also. Okay, Miss Revati says how to disclose previous month invoice not claimed earlier and claimed in the current month. July month invoice claimed in August month. 3B appearing in July, 2B in table 4 for GSTR 3B. Should that be added to auto populated value? Yes, of course. You have to edit the auto populated value and disclose this amount. Mr. Shrikant says in case of ITC mismatch, if any person shows invoice under B2C and the department audit comes and denies credit as it is not reflected under GSTR 2A and says it's a fake invoice. So how this case can be defended? Okay. So this is the last query, and you see 2A mismatch. You take number one, we are dealing with this in various states. You take a declaration from the supplier, right? Whereby he proves that the ITC has been paid and B2B has been shown under B2C by him. And thereafter, it is very clear that in the case of Bharti Airtel, that you have taken the credit as per your books of accounts. Even now in DY Beetel Enterprises and various other case laws erstwhile Arise India Limited, Bhegherulal Barchand versus State of Haryana. So many other cases are there. Even if the department does not agree with all of this, I am sure that at higher jurisdictional levels, you would be getting a relief because it is your property, ITC. If the department has got the money for the GST for the ITC which you are taking, there is no way this substantive right can be denied to you. This is our legal submission in this. Uh, we will share the PPT. You can see all our defenses on this ground. And fake invoice, finally, it remains that if the department has got the tax, if you are a bona fide recipient, then finally, even if at the enforcement stage you have to pay it under protest or any other means, it is our legal submission that the courts would be taking a right judicial balanced view in this regard. So thank you very much, friends, for joining and for this Huge response even on extended weekend. Thank you very much. We would be sharing the PPT and the video would be on our YouTube channel. Thank you to Will GST for partnering with Tax Connect on this colloquium again. We will be meeting on indirect tax colloquium next month and direct tax colloquium updates also. We would be having a separate webinar on that. Thank you very much.
Thank you, Vivek sir, for this wonderful deliberation. Thank you all the participants for attending the webinar. We conduct such webinar every month and we hope we will get you in the upcoming webinar as well. We will shortly share PPT and video link to all the participants. Thank you.